Namaskar traders and a very good evening. Well, I missed out updating for the past few trading sessions, but here we are, evening of 19th of December. It's a Monday, almost 9 p.m. And what we have today is, if I have to call it, I'll call it a bounce back of a day. By the way, as always, I'm using a triple screen, the weekly, daily and the 75-minute time frame. 75-minute time frame essentially for the short-term point of view, daily from the intermediate terms point of view, and for the long-term using the weekly charts. The tools, the indicators which are there on my charts are primarily all, to a lot of extent, proprietary in nature, in line with our mentorship traders strategies using Heiken-Ashi, momentum and range indicators. Well, so Nifty is essentially, the way I'm looking at it, is a bounce back of a day. Let's break it down step by step. We have on the Nifty what I can call as a multi-legged complex correction. One. In terms of the extent of the fall on a high to low basis, we are around 4%, which is pretty good for a short-term correction in a healthy uptrend bull market. 4 to 5% correction on a high to low basis is not bad. The trend, however, from a short-term point of view, on the daily chart, the short-term indicators that I'm using are turning down. The short-term trend anyways is down. The intermediate time frame trend is vulnerable for a reversal on the downside. The long-term charts are perfectly fine. So the long-term traders, investors should not be too worried. It's just a healthy correction in a well-structured uptrend. For the short-term traders, yes, the Nifty has definitely moved into a downtrend, and we should look at this as the first leg of a bounce back. Now, the million-dollar question for tomorrow is, do we have a low in place or not? Can we expect 18,600, 700 going forward, or this is going to get fizzled off? Now, I think the answer to this we'll get tomorrow, because today's close is extremely important. Rather than close, today's low is extremely important. Today's low aligns itself to very close to 18,300. You can use that. If 18,300 is broken, then 18,100, 130 kind of a level is highly possible on the downside. Now, these levels, if you're intrigued by them, are nothing but a Fibonacci projection of the first leg of fall on the daily time frame. So I've essentially taken this fall and projected it kind of with these levels as prospective downside targets. So trend short-term down, bounce back in our hands. Important and crucial to see whether this bounce back holds or not. 50% of today's move is the first level that you should work with for tomorrow. That's very close to 18,400. And in case you get anything surprise on the downside, and if 18,300 is gone, then close to 18,100 is not a big deal at all for the Nifty. Now that we have covered the downside, let's talk about the upsides. Now, on the upside, using the 75-minute time frame, we can clearly notice that this is where the previous lows had kind of, or this support held the prices for a certain span of time. Now, this aligns itself close to that 550, 560 mark, 18,550, 560. Which by the look of it seems like the 50% correction of the last leg down, which is all right. We can work with that. So 18,550, 560, we'll keep an eye whether it faces any kind of resistance there or not. But too early to go bullish, and unless 18,400 is broken, unless the last 75-minute bar's low is broken, it will be too early to go bearish either. So just take a little bit of time and see whether it sustains above 18,500 or it slips below 18,400 on the downside. Bank Nifty, of course, did outperform on the way up, and it's also outperforming on the way down. If you take a look at the daily chart of the Bank Nifty over here, it's nowhere close to a complex correction. We've just one leg of fall and just a bounce back. So again, whether it will open up on the downside or it will give us a bounce back, that needs to be seen. But this chart, this particular daily time frame, has the making of a complex corrective move on the downside, for which I would again reiterate that today's low is going to be important. 43,250 kind of levels on the downside. If this is broken tomorrow, then for the rest of the week you can pack your bags and expect further downside. It's possible, maybe not immediately, but eventually, because we had some amazing run up on the weekly time frame. It's a little at dizzy heights. Momentum is just about started to slow off, and so yes, this clear range that you can see here, where the Bank Nifty had managed to find very good supports. If this range is gone, then this can act as a resistance, and then we can get some follow through selling. This is from the negative point of view. From the positive point of view, if this move that we saw in today's trade, if it extends further up, then going by the 50% rule, it's somewhere here of this entire leg down, somewhere close to that 43,700, 43,750, close to these lows, or maybe this range. So that price will develop itself. We need to see. But tomorrow's trade, tomorrow's high low, or maybe we can add another day till Wednesday, is important for the entire market. Now, sector wise, it was a good day for most of the sectors, except I would say IT, which was weak from the very beginning. Infosys and TCS kind of stocks opened really weak. They did bounce back, but it still stays weak. PSU banks also stayed a little bit of weak. SBI is an important counter here. But exceptional bounce back coming in from CNX consumption. Big move, if you can see the extent of the move coming in. And all auto also did pretty good. Most of these sectors, auto consumption, these sectors have actually moved into a downtrend if I just evaluate the daily time frame. Because for the sectoral indices, it doesn't make sense to look into intraday charts. These are all derived entities, and so weekly, daily analysis is good enough. But this move from the consumption pack was very good. Auto, as I said, also gave a decent move, and FMCG and consumption played its part. But I would like to discuss 3 stocks today evening, which can play out a very interesting role this week. Let's talk about Tata Steel first. I'm going to take your attention to the top 15 names which makes up the Nifty 50. And within that, Tata Steel. Now, weekly chart, very well placed, nice uptrend, decent momentum, just slowing down a little bit. It had already gone through a bit of a correction, and it is a complex correction, which is kind of buying time. If you see over the last 6-7 days, it's kind of more of buying time rather than traveling down. So it's stuck in a congestion, and this kind of a behavior is very, very clear from our momentum indicators, which is suggesting it's a slowdown. The structure is still intact. 110 on the downside, these kind of lows, extremely important. But I am looking at Tata Steel from the point of view of participating on the upside. I feel that if Nifty holds, the overall market holds this week and it bounces back on the upside, then I feel that we should get a move from this guy. It should come, I think, tomorrow. Max day after tomorrow, but I think one move is likely. If the market sustains, Tata Steel should participate. One more stock which can give us a bounce back. It's coming down. It's actually dragging the overall markets down. But if it can bounce back, it can support the market, and that's Reliance Industries. Now, this extent of correction from Reliance Industries is quite a bit. It's not a very small correction. If you take a look at the high-low basis, it's almost 7.5% correction, which is pretty decent for a stock like Reliance. Again, the weekly charts are fine. Had recently given us a nice breakout. Oh, wait a minute, the breakout seems to be failing because the last 2 weeks the stock came down. And that's why it's extremely important that if this structure improvement or this uptrend on the weekly charts, if this has to hold, last week's low should not be compromised. Last week's low should not be given away. So I think this counter, particularly if you see a double bottomish kind of a behavior on the 75-minute time frame, if we get a move above 26.20, 26.25 kind of a zone, then 26.60, 65 from a short-term point of view and maybe further up, possible. If and only if the market sustains, Tata Steel can give us a breakout, Reliance can give us a bounce back. On the other hand, if Nifty compromises today's low, if Bank Nifty slips below to today's low, then I don't think these stocks will be able to participate on the upside because it will not have the support of the overall market. Now let's talk about a stock which can actually help the index come down, and for this we're looking at some strong counters, and a very strong counter is Larsen. Now what I'm going to share here about Larsen is only applicable for tomorrow, not day after tomorrow, because I call these kind of bars a decoy bar, wherein it kind of gives you a false impression of buying. And if these lows are compromised, which is like 2160 tomorrow, if 2160 is gone, then expect follow through selling in Larsen. This is more like a contra play. I have very basic evidences on the charts which are suggesting if and only if today's low is broken, then you can expect a little bit of correction. If this low is not broken, then this hypothesis is out of the picture, right? So with this, I think we can quickly take a look at the global markets and wrap up today's discussion. As we discussed, SGX Nifty is mildly positive at 18,500, so more or less there where we have closed for the day. US markets is kind of a mixed bag, with the Dow Jones, after going through this sharp correction, is completely flat. S&P is also completely flat, down by just 6 points. Crude is an extremely interesting chart right here at 75 and a half on NYMEX. Extremely interesting chart. This requires much more detailed analysis, maybe in some different video, but do keep a close look at crude for, I would say, a week or two from here on, right? So SGX flat to positive. We should expect a move if we mirror around 18,500. The US markets, however, the structure is not good at all, right? You can clearly see the breakout failure here. You can clearly see that it's broken out on the downside, a broadening kind of a behavior shaping up weekly. Last week's sell-off was huge, and so slowdown of this selling is very likely. It can clearly make some kind of a base formation, give you a short-term bounce back, face some resistances. So I would not say that the global markets are going to be supportive to our markets. Our markets have been a rebel and it has contributed and participated big time on the upside. We can continue to do so. But with this, I think tomorrow's session will be extremely interesting. From bearish point of view, today's low, and from a bullish point of view, a sustained close above 18,500 for the Nifty, right? I hope that you've been trading well, and of course, as always, take care of yourselves, trade well and trade wise.